Good morning. Welcome to the most underrated show on YouTube. Contrary to popular belief, I'm not on the toilet. Big numbers today. Jobs number, of course, the CPI inflation number. See where it goes. All right, good morning, everyone. So we had a lot of numbers come out, a lot of numbers that people were waiting for to come out today. Of course, the inflation one was big, the jobs one was big. There's a lot to, I would say, disappoint. Depends who you are, of course. My understanding is there's somebody else that's talking about it and saying it's a good thing. Well, clearly, they don't understand things because they think that certain companies can be worth more than basically all of the fangs put together and make more money than all of the fangs put together. But I digress. Futures right now pretty flat. I mean, they were pretty flat at the real start of the market, and now they're just even really haven't gotten a bump from either of those numbers that came out at 8:30. So let's start with the jobs number because we can rip through that one pretty quickly. Weekly jobless claims fell for a sixth straight week to a new pandemic low. Okay, well, as we've seen, this number really doesn't make a big difference because we still have the unemployment number that is doing what it's doing. So, initial jobless claims ending in the week of June 5th, 376,000 compared to the expected 370. So, weekless job. I mean, they fell, but they missed expectations. Continuing claims. Oh, wow. Continuing claims are actually down for like the first time in a long time. That's great. Okay, so there's progress being made. Like I said, I think that this is going to happen when the jobs number and the unemployment number is truly going to go down when probably August comes around, I think, just because we're getting rid of all of the extra money that the government was giving away. So I think that will be the big driver of getting people back into the workforce. It's almost forcing them. All right, here's the CPI. Consumer prices rapidly rose in May as the economic recovery picked up, reflecting a surge in demand along with shortages of labor and materials. The consumer price index surged 5% from a year ago, the highest annual inflation in 13 years. The index measures what consumers pay for goods and services, including clothes, groceries, restaurant meals, recreational activities, and vehicles. So that inflation number continues to climb. Yes, I did see that. So I saw that, Paul. So it's going to be, I mean, the Fed was targeting 2% inflation by the end of the year. We're seeing rapid increases right now. So the way to combat inflation and the way that, I mean, everybody knows this, the Fed has said that they're thinking about doing this quicker than normal, is to start raising the interest rates. They're going to begin trimming back the bonds that they're buying, the treasuries, and they are going to start trimming back their mortgage-backed securities. They're doing $120 billion a month of that. They're definitely going to start trimming that back sooner than later. And most Fed presidents agree with that from what we're seeing in all of these articles. The real thing that they're going to have to combat inflation with is that interest rate. Now, we're already seeing, I have another story in here about homes, and the cost of lumber and materials is obviously skyrocketing, so home prices are dropping. Home sales and home starts are dropping. So add on top of that increased interest rates, you might have yourself an issue. You might also just have a cool down. Not everything has to be a disaster. It could just be a total cool down, and you're not going to be able to sell your home for $50,000 or 10% more than you could be selling it for, or what the value is worth. So prices of new vehicles has soared because computer chip shortages. So this is really sending ripple effects through everything. I mean, the deeper you start reading into this, chip shortages, that means that rental car prices have soared because companies were selling their fleets when demand collapsed. It just keeps continuing down the line. Okay. More companies have started passing it on to the consumers and the higher costs of raw materials and wages, especially wages. We saw that with, what's their names yesterday? Chipotle. Food makers said their costs are climbing at an alarming pace, prompting them to raise prices. This is from the General Mills CEO. The inflation pressures we're seeing is significant. It's probably higher than we've seen in the last decade. So things are very different. The goal is high inflation. Yeah, I mean, I think Paul's right. The goal has to be high inflation at this point. Why would, because they're not trying to combat it at all. So that is what that is. Just keep an eye on it. Okay, let's go to, I will just continue with the lumber cost. So lumber, this is from a Bank of America research group. Lumber's adding $34,000 to the cost of a new home. So the total cost of lumber and manufactured lumber products for an average single-family home has soared 184% from April 2020 to April 2021, rising $48,316. The report found that the spike in lumber and related materials has added over $34,000 to the price of a new home in the past year. Pending home sales, in turn, have dropped substantially in April. The National Association of Realtors pending home sales index fell 4.4% from the previous month. So I don't know if any of you guys are building out there or have agreed to build or whatnot. Let me know your experiences with this. I'm interested to know. So, of course, the result of this, home prices and building costs have surged much higher. And until these things get controlled, this $34,000 article has been floating around and reiterated for months. Yeah, I think I've talked about this a couple times, Marcel, but it's worth mentioning over and over because we have new people watching all the time, and I think it's important that people really understand this stuff, because the more you understand, the more you understand, the better off you're going to be. Rental cars are disruptive, Kathy Wood. Rental cars are very disruptive. They're very disruptive. They disrupt me when I'm at the airport and I have to walk a mile to go and get my rental car. All right. U.S. retail sales estimated to hit $4.56 trillion in 2021. The National Retail Federation on Wednesday raised its growth expectations for U.S. retail sales in 2021 between 10.5 and 13.5% as more Americans got inoculated and the economy continued to reopen. Okay. The trade group now expects annual U.S. retail sales between $4.44 trillion and $4.56 trillion. That's up from the previous estimates back in February of $4.33 trillion. So, I mean, it makes sense. The more you open things up, I went somewhere. I think I went with maybe it was at lunch on Tuesday. I was saying to Paul, Seth, Tim, my brother, and Nate, I just can't believe that it's just like back to normal again. There's no masks. There's people out in restaurants. There's no. Everybody took down their gaps between tables. You can go in any store you want. That's what it takes to get everything back, and they're doing it. So the U.S. retail group also forecasts GDP growth to approach 7% in 2021, higher than the 4.4 to 5% projection that was made earlier this year. So that's good. We'll see. I mean, that's way higher than the average GDP growth that we see on an annual basis, but seeing that everybody's coming out of hiding and with a lot of money in their pockets, maybe that number's right. We'll see what happens going into the fall, and well, we want to finish the summer and see what happens there and then go into the fall. What do we want to do next? Do we want to talk about, all right, let's talk about the Lordstown thing. So this Lordstown thing is pretty funny. Yesterday they came out and they said if we don't get any more funding because we're kind of out of money, we can't meet our demands, our order demands, and we will most likely not be in business by the end of the year or the end of next year. I can't remember what the story said. But of course, and it's funny, when we went to lunch yesterday, Tim asked me, is Lordstown something that you'd be interested in for a short? And my comment was absolutely not, because the second that story gets out there that they need money, somebody's going to come in and give them additional funds. Boom. Here we have, this is actually from yesterday at 1:02 p.m. Lordstown shares reverse losses after, I guess they were down almost 20%. Reverse losses after the company says it's in talk for additional funds. So there you go. Lordstown is back up. I'm sure it's just going to keep going, but whatever. Lordstown Motors shares rallied to positive territory on Wednesday after being down 20%. After the electric truck maker said it was in talks with multiple parties to fundraise. So the interesting thing about Lordstown is that they have their own facility already built over in Lordstown, Ohio. That didn't last long. That's exactly right, Timo. That is very unique compared to other companies that need to buy or go and build a facility. These guys moved right into a massive, I think it's like a 2 million square foot building or something like that. It was formerly a Chevy plant. I don't know what cars have built before the Chevy Cruze, but in the end, before they went under, it was the Chevy Cruze. So Lordstown said on Wednesday in a statement, it has adequate capital to continue its operations, meet supply obligations, and begin its limited production, but will still need to raise additional funds and was in talks to do that. We are debt-free. We have significant tangible assets and multiple viable avenues to raise capital, including asset-backed financing, equity-related or debt financing, loans, or potential strategic investments over the long term. We are already in active conversations with multiple parties to do so. So I remember this when this happened in March. Lordstown shares slumped after Hindenburg Research disclosed it had taken a short position on the stock, saying it has misled consumers and investors in its demand for the vehicle. So ignore this. This is from the Hindenburg Group, the founder, yesterday. After months of denial and I don't know what that word is, Lordstown is finally beginning to acknowledge its precarious financial state and its unrealistic expectations. So their expectations were actually pretty wild, but all these EV companies are getting pretty wild with their expectations. It's not too surprising, but the truck is sweet. I like it. Is the truck up here? I mean, if this thing was actually going to happen, this truck is pretty awesome. I just don't see it competing with Ford anytime soon. And their projections are going out to 2025 instead of the expected 2022. So sweet. Okay. Now this story is not confirmed. It's from CNBC. United Airlines has reportedly been in talks with Boeing to buy 100 737 MAX jets. Now, United has not confirmed or denied anything. Boeing has not confirmed or denied everything. This is just a rumor, but we'll see. I mean, they already agreed to buy 25 or 27 back in March or February. So that will continue. That one is fine. We do not currently have a deal in place with Boeing or Airbus to purchase new aircrafts and do not comment on speculative aircraft orders. Here it is. In March, the airline had ordered 25 Boeing 737 MAX aircrafts. Looks like they're updating their fleet. It's interesting, though, with these airlines, after their... I got to go back to this Lordstown story. This is a good one. Matthew Jones. Mo, you're missing the big picture. Lordstown will be unaffected by the chip shortage because they don't even produce cars. Checkmate. Very good. Touche, you win. Okay, back to this Boeing and United. I find it funny that these companies were just burning cash. And I mean, I don't know if it's the best time to go and replace your fleets, but whatever, if that gets people back on planes, do it to it. Alrighty. What is next? Let's see. This is a great story. So those of you that just want to go ahead and put everything into crypto, you know, it's funny when we start looking at this and we start looking at percentages. I think this is hilarious on what we teach. So Coinbase has teamed up with a 401k provider to offer cryptocurrency to your retirement accounts. So good luck to you. A small group of workers will find something new in their 401k plan starting in July. The option to invest in cryptocurrency. For Us All Inc., a 401k provider, announced earlier this month that they made a deal with Coinbase and will allow workers to invest up to 5% of their 401k contributions in Bitcoin, Ether, Litecoin, and others. So I look at this 5% number, and I'm basically just going to say a lot of people have let's say that all of your money is in your 401k, except for your spending money that you keep outside of it and is in your saving or your checking account or what have you. Let's say that you invest 5% of that. When we look at what we teach, if you take 5% of your portfolio, we really say like put 90% of your money in ETFs and whatnot, take 5%, invest it how you want to, trade it, do whatever you want. I mean, I wouldn't say take that extra 5% and go and put it in Bitcoin or Ether or Litecoin or this coin or that coin or your mom's coin. But it's interesting. Firms like Fidelity Investment and Charles Schwab don't allow customers to sell or buy cryptocurrency in their taxable accounts and IRAs. I think that's probably a good decision and should probably stay that way. I doubt it will because they have to compete, but it was a good idea. Mr. Selker, I don't know who this is. Paul Selker, president of Spark Digital. I don't know what. Okay, whatever. The guardrails For Us All has built into the system will help his employees invest prudently. They are not going to let people YOLO Dogecoin to the moon. That's pretty great. The people in this For Us All fund will have access to about 50 cryptocurrencies. Employees can also invest up to 5% of each payroll contribution into cryptocurrency. So this is incredible. Just incredible. All right. Let's go to one more thing. And this is the one I want to talk about, and I'm going to teach a little bit here. So I sent a video out to the page, the Bid and Ask Nation this morning, and I told them to watch a quick video before I started talking about this. So the U.S. Fed reverse repo volume surges to a record $500 billion. So let's see. All right, before I go into this article, let me just show you what the repo market is. So from 2000 and the financial crisis back in 2008, there were minimal or no requirements for liquidity for banks. So that's when these banks had zero, they had no cash left to protect themselves. So now there's minimum requirements by the Fed. So to maintain those minimum requirements overnight, let's say we have a bank here. This is bank number 1. This is the bank, okay? This is bank 1. This thing is so hard to draw with. All right. And over here, I'm going to say you have hedge funds, you have the Fed, you have other banks that have a ton of liquidity. Let's see, Fed. This is so terrible. Okay. So these banks over here, let's say they have treasuries or they have bond notes or they have something. So this is your note. I'm going to put a little bow around it and a little tie on it. So this is your bond note. These people have cash, okay? Overnight, in order for these banks to have liquidity, what they're going to do is they're going to give their notes over to the Fed, over to the hedge funds and whatnot. So in an ideal world, you're not giving money. The Fed is not in this category. The Fed is not over here. This is an absolute emergency situation, and this has been going on for 3 years now where the Fed has had to step in. It's usually supposed to be between hedge funds and banks, and anybody that has a lot of cash, I'm talking trillions of dollars, hundreds of billions of dollars, they should be the ones supplying the banks. It's not just you and me. The Fed should not be involved in this category. So let me put a circle around the Fed. Yeah, right. So we do not want the Fed to be in doing this, but they are doing this. So what they're doing is they're sending treasury notes over to the hedge funds that have cash and saying that we will give us cash overnight, and we're going to give you back an interest rate. Sweet kindergarten pictures. We're going to give you back cash. So that they send their cash over, and then in the morning, it gets reversed. They send the cash back, but they collect, say, a 1% interest rate. So this is a quick way for the hedge funds or the big banks. Yeah, try working with this mouse that has a wolf on it. Paul, suck it. So they add 1%. So they get a quick 1% return on an overnight interest rate. So that's what's happening. And that is how these banks keep liquidity overnight. Now, what's happening is these hedge funds the interest rates are so low that the hedge funds are saying, we're not going to put up that kind of risk to get back basically effectively 0%. So there was nobody that was giving cash to the banks overnight. So these banks had liquidity issues. That's when the Fed had to step in. And the Fed was lending the money to them. They were getting back the Treasury note overnight. And when they would send the cash back in the morning to the Fed, it would effectively be at a 0% interest rate. So the Fed was loaning money at basically zero. And this is the reason that the Fed had to step in, because the interest rates were so low that the only people that would give them money was the Fed, and they weren't collecting any money on it. So when you hear repo rate, reverse repo rate, that's exactly what's happening. That is not an ideal situation. Let's put it that way. Where'd the story go? Hold on, reverse repo. So the Fed reverse repo repurchase window on Wednesday took $503 billion in cash, hitting a record peak for the third consecutive session. So that means a third day in a row, because it happens every session. This $503 billion in cash, this should be being done by hedge funds, other institutions, and whatnot. The financial institutions are flush with liquidity. Institutions flush with liquidity flock to the Fed to park their cash secured. Blah, blah, blah. Okay, so with short-term money interest rates so low, in some cases negative, investors have trekked to the Fed's reverse repo facility, which pays 0% interest. So that is that. Not good, but whatever. All right, let's get on to some charts. I'll let you guys talk about some stuff. But before I do that, let's look and see what the rates are. Nothing really changed in the 3-month, and the 10 years dropping a little bit. But actually, the 10 years dropping pretty consistently over the past 9 days. That's pretty interesting. Let's see what happens with that. Guys, if you want to join the Patreon, patreon.com/everythingmoney. Everything Minions, this gets you all of our software for free. 8-pillar software, retirement calculator. Eventually, soon, you're going to have our stock analyzer tool. You're going to have the real estate calculator. It's incredible. Join the Bid and Ask Nation. $68 a month. You get all of that software for free, and you get access to me, all of the 500 plus traders in the Discord chat, discounts to all of our different businesses. And then if you want to, you can pay Paul $10,000 and he can analyze a real estate deal for you, which makes perfect sense because I would never do a real estate deal without him. And $10,000 in the grand scheme of a massive deal, I think it's worth it. So that's that. So join the Patreon. All right. What do we got here? Let me see some cash. Let's see. Uh-oh. Mason's being a troll. Oh, okay. Give me some stocks and we'll go. Let's see what here is doing. Here. After Hours is the most underrated of the the After Hours chat in the Bid and Ask Nation is pretty epic. That's all I have to say. All right. So here, if you're in it, cool. Looks good. I like what you've done. This has been a great trade for those in the Bid and Ask Nation. Now you're up in this, you're getting into this overbought zone. But if you're still in this, I mean, this thing is tight. This thing is really great. If you get an engulfing candlestick and break out, make a new all-time high, go at it, baby. Keep going. Seth, you cannot tag people if you're on your phone or iPad. You have to be on a computer on YouTube. Viacom. I like Viacom. All right, so Viacom. Viacom, obviously, they took this big tank from, that's when the Archegos Group had that big $35 billion margin call, but it's creeping up through the sweet spot pretty nicely. And this was a great dog stock for a while. I think people did have it on their dog stock list. You're right at the 200-day moving average, and you can see over the past, when is this? Since mid-April, you're just stuck right at that 200-day moving average. Can't break through. So eventually, but you can tell, look how little the volume is. Once you get a little bit of a volume pop, like this day right here, you'll break through the 200-day moving average and get this going. But if you're in the bid and ask nation, please throw this out there. I want to look at this one for sure. I really want to look at that one a little bit more and keep it on my keep an eye on it. Fastly. I'll look at Fastly. Wait, Fastly. FSLY. All right, Fastly. Definitely a watch lister. I don't know what happened today. Did they have earnings? Was today earnings? Whoever asked this question? Airbnb. Felipe, you love Airbnb. I just don't get it. Every day. I don't know if they didn't have earnings, but they must have had some kind of bad news. But it's something to keep an eye on for sure. Something to keep an eye on for sure. Just watch that trend. All right, Felipe. Because you're here every single day, I am going to do Airbnb for you. You are a loyal follower. All right. Airbnb. So I like the trend that it's making. I do not like this volume that's just completely decelerating on it. I also don't like that Airbnb is still so new. It doesn't even have, let's see. It doesn't even have a 200-day moving average yet. It's probably, what's May 7th? 130 days old. So just be careful with that one. I would not advise going long-term on it. But if you want to, just wait till you get in the sweet spot. Make sure you have stops on it, though. All right. Do y'all think the market is going to fall due to more supply constraints and shortages with China going into full lockdown again? I haven't heard that they're going into full lockdown again, but I don't know. I would have thought everything would have fallen apart back in March and April of last year and would have continued to do that. And here we are in the exact same position of, well, we have all-time highs again. So who knows anymore? I really don't know. All right, BTU. Actually, not looking terrible, but because the stochastic is where it's at and it's so high and it did that sweet spot reversal, I would suggest coming over here. Your volume's pretty good. Your stochastic is over 80%, but I think I would swing trade this. But wait till this pops over this $9.07 resistance point. Once it pops over that, I think you'll be good to go. But this is definitely more of a swing trade than a long-term trade. What's next? Give me another one. CRSR? Why not? Okay, I don't like this. And the reason I don't like this is just all it's doing is just consolidating sideways. And it just keeps reversing so low. And it's trying to reverse again so low. Okay. So we don't even have... What do we got here? So this is a newer company. So this company is... This is February 18th. This company is 150 days old or something like such. So it's rather new. That's probably why you're seeing this. You get the big run up initially, of course, because it was probably this Corsair Gaming. And now it's just breaking down and it's just consolidating. So just be careful with this one. Wait until you get some good buying volume coming in and break out above this level. What is this level? Break out above $36. Get above $36. And you will be a lot better off from there. All right. Let's see. What's next? Guys, follow me on Instagram. TraderMo_EM. TraderMo_EM. And follow Paul. It's at Paul Gabriel. GABRAIL. All right. Get me to 1,000 followers. Paul's already at 1,000. Catch me up. SWBI short. Interesting. All right. Yep. This is a good one. This has to be. Who said this? Of course, it's Cash. So he's ahead of the game right now. So he's looking at it, and he just sees we're not in a downtrend yet, so definitely not shorting it yet. But once this thing breaks below 80%, then you can go ahead and maybe look at it short. But he sees decelerating volume. Just remember, Cash, you're going to have a lot of a lot of support right here. So it's going to be very difficult to break down through these moving averages. But great question. United Health. United Health is in some trouble for the way that they're doing ER visits or something lately. I saw that in the news this morning. The way they're insuring or not insuring ER visits. Yeah. Let's look at United Health. Look at United Health over the past year. 2 years. This is incredible. This is from March 23rd all the way up to here. The thing went from $180 to 404. Let's call it 400. Just incredible. So if you want to do something with United, it's for sure a short, but you're going to have to take out this level right here. Once you break through that, even you have support. I mean, this is a lot of support. You might be able to write it down to like $380 if you get lucky, but this is a tough one. And this is in a lot of people's portfolios, a lot of big hedge funds portfolios. So be careful. Let's see. Ford is turning. Yeah, Ford is definitely going to be. That run up on Ford was ridiculous. I told everybody this is on our watch list, and this thing is so steep, and it just shot up so quickly because of that truck. There's no doubt that it's coming back. Before I say another thing, let me look at the line. Maybe not. I don't know. I could be wrong. It's making great W formations all the way up like so. But we'll see. We'll see what's going to happen with Ford. I hope that they can come out with that truck when they do. And let's see. All right, guys. Well, that's it for today. We have a lot of recording to do today. Don't forget, for the top tier patrons, so that's the Bidnass Nation and Pulse Super Shorts, we have a 2 p.m. live stream. Come with whatever questions you want. We do that every Thursday for those exclusive tiers. And you guys, and it's very chill, and we can talk about whatever. And there's like 100 people in there, and it's great. So you guys have a fantastic day. Enjoy the weather. It's beautiful outside. And we will get back to this tomorrow. We'll go over a lot of wins and losses for the day. And that's about it. Have a great day, guys.